For savvy investors out there looking into the infinite banking concept with an IUL, you must first understand how accessing money out of your IUL actually works. And if you don't know what an IUL is, pause this video, check out the description below. In there is a linked video that will explain to you exactly what an IUL is and how it works. When you're done, come back and revisit this video. My name is Amanda Ryba. It is my goal to illuminate to the world what wealthy people are doing with their money. And one thing all wealthy people understand is the power of leverage. So today we're going to dive in to how you can leverage the cash value inside of your IUL to make additional investments. Let's dive in. You have two options for accessing money out of your IUL. We have withdrawals and loans. Withdrawals remove your money out of your IUL. You're not able to pay it back in because there's a cap on how much you can contribute into your IUL every single year. Also, if you withdraw your interest will be taxable. How we keep every transaction tax-free with an IUL is through option 2, which is loans. Loans come with a few benefits. Number one being you have the ability to pay the money back into the policy at some point. Because of the fact that there is a maximum amount that you can contribute into your IUL per year, your loan value, when you are paying that back, it doesn't affect that. So you could still contribute on a yearly basis and pay off the loan at the same time. The second thing that's a benefit is the fact that it allows you to access your interest 100% tax-free because loans are not considered taxable income by the IRS. The downside is to be classified as a loan, the IRS makes the life insurance companies charge you an interest rate to borrow that money out. Now, the insurance companies have gotten pretty savvy with this. Most of them will recredit some of that interest back into your account at the end of the year. Now, with most insurance companies, there are two different loan types you can choose from. We have declared or alternative or participating loans. Declared loans actually remove your money from your account. Similar to if you were making a withdrawal, that account value is going to go down. It works the exact same way with declared loans. I know, confusing, right? So why would we do a loan when we could just make a withdrawal? Well, reason is because if you loan yourself that money instead of withdrawing it out, your interest that you're withdrawing will stay tax-free, right? Because it's on a loan, it's not a withdrawal. And you have the ability to put that money back into the policy if you choose to at a later date. Now keep in mind, again, it's a loan, so the insurance company has to charge you some kind of interest to do this. Most insurance carriers would charge somewhere between 3 to 4% for a declared loan. However, after a certain amount of years, most insurance carriers will recredit that same interest back into your policy, netting us what we call a zero wash loan. So if your goal is not to pay the money back into the IUL, you would most likely want to take that money out on a declared loan because high chance what they charge is going to equal what the insurance companies credit. So you're looking at a 0% rate of return to get to that money tax-free. Compared to an alternative or participating, or what some insurance carriers call a variable loan, these are very special loan types. Not every insurance carrier that offers you an IUL will have this as an option. So you always want to ask if they offer participating loans. Participating loans allow you to access the money inside of your cash surrender value without depleting the value of the account. So for example, let's say you have 200 grand inside your cash surrender value bucket. You want to get to $100,000 of it. If you took that out on a declared loan, your $200,000 would be reduced to $100,000. But if you take that out on a participating loan, your cash surrender value will still stay at $200,000. And the reason is because you took a loan from the insurance company, not from yourself. The insurance company uses your surrender value as collateral for that loan, which allows it to still grow and compound in a way we call uninterrupted compound interest. Now, of course, it's not free to do this, right? That would be too good to be true. Most insurance carriers charge you somewhere between maybe 5 to 5.5% to borrow the money out. But think, if you're earning 7, 8, 10 or more percent interest per year on that money, you're netting 2, 3, 5 plus positive percent every single year on money that doesn't technically exist. This is how you're able to leverage money in two places at one time through what we call the infinite banking concept. There you go. To recap, there are two ways that you can get money out of your IUL. We can go through the process of a withdrawal or a loan. And most of the time you usually want to do a loan, right? Because loans are what allow you to have access to your interest all tax-free. And if you're going to do a loan, you have two options for loan types with most insurance carriers. You will have your declared or your alternative or participating loans. If you're looking for the infinite banking feature, you're going to be looking for that alternative or participating loan type. Not every insurance carrier offers it, so make sure when you are looking at an IUL policy that you ask that question. Do you offer alternative or participating loans? What is the interest rate that they're charging you to borrow that money out? And how many years do you have to wait to be able to access that money on that loan type? With most insurance carriers, it's probably 2 or 3 years into the policy. With a handful, it's after a year. And with a select few, you can get to the money on an alternative loan after about 30 days of the money being inside your cash surrender value. So hopefully that helps. It's actually a very simple concept. Borrowing money out of your IUL, as you can see, it's not very complex. There's just different ways you can do it. This is why it's so important to connect with a licensed insurance agent in your resident state or country that is trained on how to set these policies up correctly for their clients. You don't want to sit down with somebody that has never done this before, because you could end up with a policy that has nothing to do with your financial goals. If you live in the United States and you'd like to work with me or my team, we would be happy to assist you with that. All you have to do is click the link in my bio that will take you directly to our calendar, where you can register a time to meet with us to talk about your goals and what you're looking to do. There's also, if you click that link in my bio, an option to scroll down and click IUL quote request. So maybe you're ready to see an actual IUL quote. Click that button. It'll have you fill out some basic information and some health information so we can prepare an accurate quote for you. Then it will take you to my calendar to schedule a time for us to chat one-on-one. I love making content like this, so I'm very happy to see that you stayed till the end. If you want to see more content just like this, all you have to do is click subscribe and hit the bell to turn on notifications, because you know I release a new video every single week. And my goal is to continue to illuminate to the world what wealthy people are doing with their money. And all wealthy people are catching on to the benefits and the value of growing and building wealth inside of life insurance, leveraging IUL policies. So until next week, this is Amanda Ryba signing off.